Hi, good evening. Ross McInnes from Australian Investment Research Services. Thanks for joining us. Monday, May 24th, the daily wrap. Markets across Asia were a lot calmer today after the S&P 500 in the States closed Saturday morning back above 1,080, the pivotal 1,080 area. This was in part due to the US Senate passing the US Wall Street and Banking Reform Act on Friday morning Asian time, which seems to have calmed things down a touch. But as per the euro pressure this afternoon, the euro falling back to 124.20 versus 4-year lows last week at 120. There was a nationalisation effectively of one of the Spanish banks, the CAIRS Bank, by the Spanish Central Bank, which again raises the prospect that structurally there's still major problems in Europe as a knock-on from the Greek debt crisis, but just generally the banks there are under a lot of pressure from the poor performance of the underlying economy. Australian stock market today, as we were discussed this morning in the morning report, looking for 4,400 in S&P 200 after it closed below 4,300 on Friday afternoon and got down to 4,175 on Friday morning, which represented a 15% fall from the April highs at 5,000. So the market performed pretty much as we expected, moving up to 4,395 into the close, and this was driven, as per the US banking legislation, by Australian banks finding some support, plus 3% generally. For stocks like ANZ, they'd been down 20% over the last 3 to 4 weeks. So there's some value buying there again if you're prepared to have a look at it right now. But obviously there's going to be more volatility. We haven't finished that period of volatility at this point. We need, as we've been suggesting, we still need much more coordinated policy action out of Eurozone and through the G20 to again promote to markets that structurally things are under control again. So also, as we mentioned this morning, we went to the Treasury, Australian Treasury brief on the new resources tax, super profit tax. The Treasury officials met a fairly hostile environment, as would be expected given the sell-off that we've seen after that May 2nd announcement. The primary focal points for the discussions were on the transferability and deductibility of expenses and costs in these projects. The tax actually is aiming at purely at profit, so that the costs are taken away. But the main question from most of the resource companies was, how do we take these, add the costs up if we go into a JV? How do we deduct these? How's the government supporting through the 40% guarantee that they've been promoting? How does that all fit together? The other thing was the taxing point, where they're going to actually assume that there is a point from which the taxation of revenues occurs. Is it right at where the mine, where the material comes out, or where it's actually receiving its price later down the production area into the upstream? So again, it looks like there's a lot of issues that hadn't been resolved, and that's why they're having these conversations with the market. It seemed to me that the market, most of the people from the markets, from the resources companies, remain very sceptical of how it's going to work in practice. And from talking to some of the smaller operators, it did appear that it has put a lot of funding in doubt from both the banks and overseas investors. So it's something for the government to really think about, and it does appear that there's going to be a lot more consulting before we get any real consensus on how this is all going to work going forward. Despite this, we did see BHP up 2% today after being beaten down very heavily last week on the view that Europe was going to take the world economy down. So going forward tonight, not a lot of data, but ahead of US consumer confidence tomorrow night, which will be a very a key indicator for the whole week in terms of giving us some view on how consumers are responding to the latest volatility in the markets and whether it's going to create a real shock, which, as we mentioned, if this volatility continues for another couple of weeks into mid-June, we believe that it will create some sort of economic shock. So overnight, key levels will be 81.80 on the Australian dollar, on the S&P 200 SPI futures index. We're looking 43.50 as initial support there, followed by the 4200 area being key. But not a lot of major data tonight. So again, just really looking for more feedback on the policy side. So thanks for your time, and we'll speak tomorrow morning. Bye for now.